what are the financial obligations of a sole trader business? So what do they have to file every year? What forms do they have to fill out?
All you have to do every year, you have to keep your accounts. It's required by law. Keep your accounts, and at the end of every year, you do a tax return and you pay your taxes. That's the basic thing. Keep your accounts during the year, hire an accountant. Hire an accountant, keep your accounts up to date, do your taxes at the end of every year. Sole traders do not have to pay green fund levy. Let go the balloons and the doves. You're happy. You don't have to pay green fund levy. If you are making a profit, you have to pay tax. The rate of taxation is 25%. Believe it or not, that's a very good rate of taxation. Other countries are 30, 35, 40. We are 25. And if you're making a loss, but your revenue exceeds a certain threshold, I think it's 360,000, you have to pay business levy at a rate of 0.6% of your revenue. It's a small number, it's a nuisance number. But in a nutshell, if you make a profit, you're paying 25% of your profit as tax. If you make a loss, you're paying 0.6% of your revenue. And you pay that each quarter, in a March, in a June, in a September, and pay it just before Christmas, because you never know, you might spend out all the money on gifts.
So sole traders have to, there's only one tax that sole traders have to pay, and that is payable every quarter, basically.
Correct. One tax if they're making a profit, that is income tax. If they're making a loss, there is one tax to pay. It's called business levy. It's nice and it's simple. There is a misconception that a sole trader does not have to pay taxes. I don't know who came up with that. I have heard it often. And I think people assume that I'm a sole trader, I don't have to pay taxes. I'm a company, I have to pay taxes. That's the best reason to remain as a sole trader. No, you still have taxes to pay.
So there is, either way, whether you're making profit or loss, you still have to pay tax quarterly as a sole trader.
Correct. But business levy it ends up being small. It's almost a nuisance number. The intention, I guess, of your government is that there were businesses on the rolls existing for decades, making losses, yet they're still in existence and they're paying $0. So the law was changed, and they decided, listen, you're making a loss, still pay us something, a little piddling something. And that's how they came up with green fund and business levy.
Interesting. So based on my understanding, in Trinidad and Tobago, there are two types of business you can register mainly. Or is it three types? Sole trader, a partnership, and limited liability.
Like you just went back to O-level principles of business or principles of accounts. Correct. That is, roll back the time, Frank Wood, Principles of Accounts, A.J. Favell was another book. Three types of businesses: sole traders, partnerships, and companies. I have about 150 clients. I had, past tense, I had 2 partnerships. One closed, one became a company. I find now that partnerships are rare. They are they are more rare than an albino unicorn. You just don't see them anymore. It's almost as though it's something that you do in school only. Like it doesn't exist anymore. So it's still there as a third type of business, but it's rare. So you're left now with sole traders and companies.
So to your mind, what's the deciding factor between registering a business as a sole trader or registering it as a limited liability?
Most of my clients ask that same question. What do I do? I'm now going to start. Do I start as a sole trader? Do I start as a company? I will say it like this, but this is not a hard and fast rule. If you're small, sole trader. If you're big, company. So if you are about to start off, but you have a contract that you're about to sign, If the nature of your business is such that you know are going to open up 5 branches and are going to hire 42 people, company, right? A company is really designed for higher revenue, lots of staff, more than one location, online store, I export in, company. If you know you're going for tenders, company. If you know you're going for big loans, company. If you know you're going to have a set of assets, company. If you're going to export and you're going to go to Export TT and ask for the grant, company. If you're going to try to sign up for a lot of the incentives that the government is giving, they're still available for sole traders, but company. If you're dealing with a foreign company with foreign entities, company. If it's you starting something at home, you're going to sell no physical places yet, you're going to drive around and deliver, then eventually you'll hire a delivery guy. Start as a sole trader. And what is nice is, as and when your business grows, you lean back and you say, I listen to Ashana, I listen to Robert. My business has grown. I will now convert from a sole trader to a company. So a lot of people, when they now start and you're not sure, are small and I'm not sure how long it'll take me to get big, I don't have tenders, I don't have big contracts, start as a sole trader. And then at a later date, change and become a company. You have some flexibility.
Okay, so I have some questions here. These questions were submitted by persons for me to ask you. So these two, I believe, were submitted by Annalisa. So hopefully she'll get to see these. So the first question is, what are the minimum tax requirements for a sole trader, which I think you touched on, but maybe the way that she's phrased it, maybe we can answer it specifically the way that she's phrased it. So what are the minimum?
Right. Every quarter, you have to pay your taxes. If you're making a profit, 25% of your profit. If you're making a loss, 0.6% of your revenue, you pay it every quarter. And then at the end of the year, you do your tax return. And if there's any little difference, you pay it there. That's your minimum requirement. It's very easy. It's very simple.
And the other question is, what expenses can be claimed as a sole trader?
Hire me first and I'll answer it. Obviously, the direct expenses involved with your business. If you're buying stuff and you're selling, obviously the stuff that you're buying. But your Board of Inland Revenue allows you a percentage of what they call your home expenses. And a lot of sole traders start operating from their home. So you're allowed a percentage of your rent, of your electricity, your flow bill, your telephone bill, 75% of your motor vehicle expenses, a percentage of your overseas travel, if it is related to the business. And that is why you have to not fair registering at the Board of Inland Revenue. It doesn't automatically mean that you're going to be paying taxes through thine nose hole. It doesn't mean that. You get to, you have your revenue, you subtract your direct expenses, and then you have other expenses that you're allowed to deduct. Best thing to do is to hire an accountant.